In this video, I'll talk about how big banks are now hiring crypto talents, what this means for the market. Don't forget to subscribe. Let's head into it. Demand for cryptocurrency and blockchain talent is soaring, as big banks make a big push into the asset unregulated space. According to LinkedIn, US job postings for crypto and blockchain positions have skyrocketed 615% in August compared to the same period last year. We're seeing this across the big banks, and that's really the sea change over the past few years. Big banks were the ones kind of hesitant and scratching their heads over adoption of cryptocurrency and the need for crypto talent, but now they're getting in the game. JP Morgan Chase CEO Jamie Dimon publicly expressed his doubts about Bitcoin, the largest cryptocurrency with a market cap of $1.17 trillion, as recently as last month in an interview, calling it a little bit of fool's gold that has no intrinsic value that regulators would regulate the hell out of. Yet despite his skepticism, the bank started offering clients access to half a dozen crypto funds in July. Crypto talent hiring by major financial services firms rose 40% in the first half of 2021 compared to the same period last year. According to LinkedIn data, the site projects these firms are on pace to add more than 3 times as many workers with experience in digital assets to their payrolls in 2021 than they did in 2015. Some of the biggest banks and financial firms have added about 1,000 crypto-related roles since 2018. Among those hiring the most are JP Morgan Chase & Company, Wells Fargo & Company, and Goldman Sachs, which shored up their ranks as demand for the fast-developing virtual currencies ballooned. JP Morgan Chase, BNY Mellon, Deutsche Bank, Wells Fargo, Citigroup, Goldman Sachs, Morgan Stanley, Capital One, UBS, Bank of America, Credit Suisse, and Barclays are the major financial institutions hiring the most crypto talent for a mix of roles, ranging from sales professionals to workers designing crypto offerings for consumers and engineers, building blockchain platforms for banks. The banks can't run the risk of their clients go to another bank to do these services, so they need to build up, said Alan Johnson. This is a big asset, a big opportunity, and they need people, and need them in a hurry. They're willing to pay a lot. In another sign of Wall Street's broad embrace of crypto, the first Bitcoin ETF, ProShares Bitcoin Strategy ETF, started trading last month. There is technology that needs to be built, that underlying blockchain ledger technology, so software engineers are in huge demand. Crypto is also a product that needs to be sold and marketed and explained to customers and clients, so sales and marketing roles are also on the rise. Security positions are in high demand too. Security is so important around crypto assets. These are clients' assets, clients' money, and they're moving around the world, so security architects are also roles that we are seeing on the rise. While banks are rolling out compensation bumps to crypto experts that can be 50% higher than the pay of their peers in non-crypto related jobs, operating in a regulated environment may be a bigger obstacle in attracting talent. Banks have a lot of regulatory responsibilities and burdens. They want innovative talent, but they want to make sure that talent is accustomed to working within the bounds of existing regulatory frameworks, because the banks don't want to step outside of those bounds. While compensation packages at big banks may be attractive, crypto experts may well be served in heeding this advice before taking the plunge. If you're that job seeker, you have to recognize that you're stepping into a legacy world of finance to work on the future of finance. That's a little ironic, so you want to do your full due diligence. Bank of America, for one, is looking to add to its crypto research team over time. The group was set up in July, following calls from clients seeking to understand how they can invest in the assets. The industry and the technology became too big to ignore. There is going to be a significant value creation among the ecosystem, and we want to make sure clients understand how the value creation occurs. The bank's move signals traditional finance's new openness to Bitcoin, as its value soared over the past year to a record in October. JP Morgan's Dimon, who later said he regretted his fraud comment, said in October that he'd follow his clients, whatever his opinion. Morgan Stanley Chief Executive Officer James Gorman, who reportedly once called Bitcoin totally surreal, said recently it's not a fad. Gorman's bank appointed Sheena Shah to lead a new crypto research team in September, while JP Morgan and Goldman Sachs have begun offering crypto futures trading. MasterCard just struck a deal, making it easier for banks to offer cryptocurrency rewards on their credit and debt cards. We're experiencing the golden days of Wall Street in crypto. We are in the early days of capital markets 2.0. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. With that, I'll see you in the next video.